Happy Monday, everyone. This is Briar's Bits, episode number 95, brought to you by Briar.io and Cheesecake Swap. Four stories today in the market. Let's get straight into it here. Leading off with the market, Bitcoin down 0.2% today, pretty much going even all day. Bitcoin at 56,142.38. Ethereum down 1% even, $2,202. To my beloved ChainLink, which is down 4.2% at $37.02, dragged down a little bit by the volatility of Bitcoin earlier today, but still going strong. First story today is crypto fund inflows accelerated to 233 million last week, most since early March from CoinDesk. Investor appetite for digital asset investment products increased last week with strong interest in XRP, which I'm not a fan of, as we all know. Dominic Dante's inflows into digital assets investment products nearly tripled to 233 million last week, according to a report Monday by CoinShares, a digital asset management firm. Last week's inflow of 150 million was the largest since early March, possibly reflecting Bitcoin's brief rally at an all-time high of 65,000. However, the cryptocurrency has since declined to around 55,000 at press time. Inflows this week were unusually spread over a varied set of digital assets, according to CoinShares. Bitcoin products saw the largest inflows of 108 million, while Ethereum products continue to see outsized inflows of 65 million relative to its market cap. XRP has been the most popular with weekly inflows of 33 million, nearly doubling its assets under management to 83 million, said CoinShares. XRP assets have roughly doubled in the last month, or month to date, Second story here as we go along is from YFXDEX. Our token is currently being audited by CertiK, so whenever CertiK is done with that, we will distribute the mining rewards for our last contest. So heads up to everybody on that. Thanks for participating, and that will be coming shortly as soon as they're done with that audit. Third story today from Marco Cavicchioli of the Cryptonomist. Yesterday's price crash does not seem to have affected Bitcoin's medium-term trend. After 3 weeks of prices consistently above 55,000, yesterday it plunged from around 60K to below 53,000 in a matter of minutes, only to recover shortly thereafter. Within an hour, it was back to 55,000, then slowly climbed back up over the course of the day to $57,000. Sentiment pointed out that at the very moment of the sudden and rapid collapse, the social networks exploded with "buy the dip" and "bought the dip" comments. Sentiment feed: the crowd appears to be, this is the tweet, to be confident that Bitcoin's dip to 53,000, 53.3K earlier today was nothing more than a small bump in the road. Our data indicates buy the dip mentions peaked on the small correction, while bought the dip peaked on the major one on Sunday. Moreover, the peak of the buy the dip post occurred before the real crash started. Example, when the price had just begun to fall, while the peak of the bought the dip post occurred just before the price fell below $53,000. According to Sentiment, this data suggests that people remain confident in Bitcoin and that yesterday's drop was just a little bump in the road. If this is the case, then it would seem that yesterday's drop was not able to make a real dent in Bitcoin's trend. The trend of Bitcoin's hash rate, which I haven't talked about recently. Another parameter that seems to be heading in the same direction is hash rate. In fact, on April 16th, there were some incidents in China that forced several mining farms to suspend operations, suddenly cutting as much as 35 exahash. The graph of the Bitcoin hash rate clearly shows that on the following day, April 17th, there was a real collapse because of 157 e-hashes 2 days earlier that had fallen to 105, a drop of nearly 33% in 2 days. Yesterday, this parameter had already risen to 110 e-hashes, while today it is already back above 130 e-hashes. The problem has mainly been reflected in Bitcoin's block time, which has jumped to 15 minutes from the usual 10 minutes. Yesterday, however, it had already fallen below 12 minutes, though today it seems to be particularly high again. This data clearly shows that there's been a problem over the last few days, but it seems to be on the way to being solved. However, we will probably have to wait until May, before there's a new change in difficulty. That could solve the problem for good. It is possible that this will be one of the largest reductions in difficulty in percentage terms in recent years. So that one from the Cryptonomist. And lastly, the UK government, this is a pretty big story, established a central bank digital currency task force. The United Kingdom is the latest country to begin exploring the possibility of creating a central bank digital currency. They're all going to have them. This from Cointelegraph, Asato Avan Nomayo. Her Majesty's Treasury and the Bank of England have have begun preliminary central bank digital currency studies that could result in the creation of a national digital currency. In a document published by HM Treasury, the executor, the Exquire, announced that then the creation of the CBDC task force in collaboration with the United Kingdom Central Bank. Sir John Cunliffe, Deputy Governor of the Bank of England, and Catherine Braddock, Director General of Financial Services at HM Treasury, will co-chair the task force. According to the terms of the reference document, the task force will synergize the efforts of all relevant statutory bodies in the UK regarding CBDC development. As part of its duties, the task force will explore preliminary issues associated with the design, implementation, and operation of CBDC in the United Kingdom. The task force will also interface with stakeholders across academia, fintech, and other relevant industries to identify the technological hurdles involved in creating a sovereign digital currency. The joint HM Treasury and BOE task force will also monitor CBDC-related developments on the international scene, especially as other nations are actively exploring their own central bank digital currency projects. According to BOE press release issued on Monday, the central bank will also run its own internal CBDC unit headed by Cunliffe. The establishment of the task force is yet another indication of the UK's government's focus on digital currencies and fintech in the aftermath of Brexit. In November 2020, Rishi Sunak, Chancellor of Exchequer, said the Brexit offered an opportunity for the UK to revamp its financial services sector. Since Brexit, Sunak has overseen a significant policy toward harnessing novel fintech innovations like CBDC and stablecoins. As previously reported by Cointelegraph, UK Financial Services Minister John Glenn has identified stablecoin regulations as a major focus of the government in the area of cryptocurrency regulations. According to a report by Reuters, the UK's financial market focus is also extending toward distributed ledger technology firms. Speaking during a financial industry conference on Monday, Sunak announced that the government plans to establish a fintech sandbox for blockchain startups. So every central bank is going to want, every government is going to want a cryptocurrency. Well, it's not going to be a cryptocurrency. It's going to be a centralized digital currency where they can literally shut you off whenever they want. They can track every single thing you do. It'll be in no way cryptic. It'll be in no way crypto. It'll reflect no aspects of cryptology or cryptography. It'll have nothing to do with crypto. It'll be a way to trick the layman, the novice, the people that don't understand blockchain tech, the people that are buying Dogecoin. That's who will be using central bank digital currencies, while the rest store their wealth in Bitcoin and probably play in DeFi and utilize some sort of privacy coin for fungible transactions. That is episode number 95 of Briar's Bits. Hope everybody has a good Monday night. I'll try to bring you guys another episode this week. A lot going on, but the market, I don't think we have anything to worry about here. Bitcoin holding 56,000 right now. Really hanging on to 55K earlier in the day today. It dropped a couple $100 below 54.7-ish and has really found a lot of support there. So we'll have to wait and see, but ChainLink hanging out right below $37 right now too, and Ethereum right under 2,200. So everything looking pretty good. Just another one of these pullbacks. The market cap, 2.11 trillion. I don't think we ever dip below 2 trillion on the pullback, and Bitcoin dominance, which I have to say I did call the top of Bitcoin dominance within 24 hours of it when it was at 74%. All the way down, we've dropped now almost 25% to, or actually we have 25% to 49.6%. Bitcoin dominance still under 50%. So pretty crazy where we are in this market right now, but I don't see it slowing down anytime soon. Never financial advice. Everyone have a good Monday night.